Bill, first answer the question. You're an investor. Do you react to what you heard from Chairman Powell yesterday?
No, we don't react. And when it comes to interest rates, we're definitely of the belief that demand from millennial household formation is going to drive interest rates. So they should move higher over the next 10 years. We're going to have an enormous growth in the number of people 35 to 44, and people wait later to get married. So therefore, the 2 kids are there and the house needs to get bought by about 35. So that's going to drive interest rates. In a way, it's an irony that this gentleman takes over at a time that the control of interest rates are going to be taken out of his hands by the demand that comes from the largest population group.
So as an investor, you already priced in, as it were, increase in interest rates. How far?
Normalized rates would maybe be 5% on a 10-year Treasury, say 8 years from now, or 6 years, or 5 years from now. And this is like the first leg. It looks kind of like the first leg. And the other thing that's funny is the last population-driven home building 10-year stretch was in the late 70s and the early 80s, and the mortgage rates were like 13%. So I love people saying things like, oh, they won't buy a home because the mortgage rate's going to be 4.5%, when 4.5% is way at the low end of what everyone's paid for the last 40 years.
But that's what they know, so to be fair. But in terms of where we're looking at for hikes, this is how the market's currently rating this, Danielle. If you come inside the Bloomberg, you can take a look at it. This is the Fed funds spread for 2018, and you can see this the blue line's 1 hike, red line 2, green line 3. Finally, it seems like the market winds up believing the Fed. You used to work at the Fed as well. Did Powell do the right thing yesterday?
I think he did. What I think that he did not do was speak in gibberish. So it was hysterical to watch the parlor game throughout the day. Everybody was trying to parse what he was saying. And I'm like, there's nothing to parse here, people. He's just speaking in plain English, just as he did in his Senate confirmation hearings. So I was actually expecting that, but I don't think that the market was. I don't think that investors were. Yesterday was the first time we crossed the line of over a third of a percentage of a probability of a 4th rate hike in 2018. And given his plain spokenness, I think that that's what markets have begun to anticipate.